This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian's with Midwest Market Solutions. And Brian, great to have you here. Welcome back.
Hey, Tony. It's always good to have a conversation with you on Wednesdays, our normal day, talk about the markets and what's happening, what's the news, where we're going to go.
Well, and a good place to start is red. Saw a lot of red across the board on Wednesday, which, by the way, is the next to last trading day of the week. Friday, no markets as we take Friday off in observance of Good Friday. Now, this is on the heels of a couple of USDA reports that rolled out. We got the quarterly grain stocks numbers, and we also got planting intentions. And really, sitting back, I wasn't completely surprised by really anything there. I guess I could be mildly surprised, but I think we can discount a couple of things and go, okay, this is when the survey was taken, and we can discount that. But can the algorithms, can they discount numbers like this? Can they work a little bit of logic in there, or are they just going to trade?
Yeah, I think those algorithms that you're talking about, they're more find a headline, find some words in the headline, and trade off of that wordage without any logic involved, so to speak. So, yeah, the reports you're talking about, I think no one was really overly surprised by the increase numbers. Maybe wheat, you could say that was a surprise, being at the lowest level since 1919. USDA did lower winter wheat numbers, I think, far more than what was expected, and spring wheat numbers were down, but that was kind of expected. If anything that stood out, it was probably the stocks numbers. And, producers out there are wondering, why doesn't the basis improve, and why can't cash prices be better than what they are? Well, I think the USDA told us yesterday the U.S. corn stocks on hand at this time are the largest on record ever in history. Soybean stocks are the highest in the last 6 years. Wheat stocks are the highest in the last 5 years. So there's plenty of supply around here in the United States. And without the benefit of this war and crude oil rallying sharply, I don't think we would see as much strength in corn, soybeans, and wheat as what we do see today. I think you certainly would have some strength in soybeans because of the renewable fuels and the increased use for biodiesels. That's very supportive. But even with very strong demand for biofuels and very strong export demand for corn, feed usage, and ethanol grinding for corn, we still have huge stocks, record large of all time here. And that's going to cap our basis levels. And if you're hoping for basis to really improve in the spring into the summer, there's a lot of corn to compete with you that will get moved to the market at some point in time. Now, we may have pockets where basis narrows and improves while farmers are busy harvesting or weather is adverse, but by and large, we're going to struggle, I think, on basis because there is so much cash product that'll need to find a home into the next 6 months.
Yeah, and again, when I say lower on Wednesday for the row crops, corn lower, beans lower, bean oil was lower. Now, soy meal was higher, so there's one. Canola lower, oats lower, rice lower, and then cotton higher. And I guess if there was a bit of a surprise in that prospective planting, maybe it was cotton, which was, off to a nice little rally. I'd been looking at the cotton numbers here, and 2 years ago tomorrow, the 2nd, the cotton market was at 90.81 cents per pound, and you go back to less than a month ago, and we were trading in the 60-cent level for cotton. So, I mean, we've had quite a run here when you step back and look at it from a larger perspective. But the fact that you're trading 60 to 65 cent cotton doesn't seem to be a reason to want to put that in the ground when you're 15 to 20 cents away from break even. Did that throw up maybe a question mark?
Yeah, I think so. There's a lot of producers that were looking at the forecasts for cotton areas and thinking we're going to get some rain and that should hurt prices. And it didn't really happen in cotton today. We kind of absorbed that news and then ended up to rally and close higher. It was the wheat market that saw smaller acreage numbers, but yet with the rain in the forecast, lost triple-digit ground today, as there's better chances of rain than it was yesterday. And I think you're seeing something in the wheat market here it's had a big rally, well off of its lows, dollar rally, and producers are willing to hedge and sell at these higher price levels. I don't know that cotton is at that same place in its marketing strategy. Like you said, 2 years ago we were up around 90 cents. Cotton's in the 60s, low 70s. Not as much incentive to hedge at this price level as if we were in the 80s or even 90 cents.
Well, and then we could step back and say a lot of this is because of what we've seen in the Middle East and just the fact that we don't have really any clarity as we're moving forward, whether we're talking economy or a global economy. Just stepping back, looking at the energy markets, they reversed and ended up kind of lower on the trade Wednesday. Any final thoughts here on the energy markets?
Well, I think volatile will be a word that we'll see tonight. President Trump is expected to speak on Iran and the situation, what's going on, and it seemed like crude oil today just kind of bid time, waiting to see what he's going to say and how this is going to play out. He wants the war to end. He wants the Strait to be open. Iran is giving us conflicting news reports, whether they're negotiating, whether they're not. It seems like over the weekend, once the weekend comes, that's when we really start to see some volatility. So here in the middle of the week, we may not see a lot of movement in the crude oil market. We did see some lower prices today, but it's holding right around that $100 a barrel in the May WTI contract, just trading on both sides of it, very content until we get new information, I think, from President tonight and maybe get a little bit later into the week.
Brian Hoops is with Midwest Market Solutions online, midwestmarketsolutions.com. We're back in a moment with more Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian is with Midwest Market Solutions, online, midwestmarketsolutions.com. Pressure in the row crops, really only found that went higher as far as row crops cotton market. But over to the livestock markets. Could we make it 5 in a row, 5 straight sessions higher for live cattle and for feeder cattle? And the answer, Brian, yes?
Yes, we can. We sure can. Cattle market has been very strong, even though midday box beef was lower today. We've had a string of higher box beef that's helped the packer margins stay consistently in the black. So it wasn't just a kind of a one-day wonder where we had packer positive margins and then changed their tune and our cutouts really dropped off. The cutouts have held relatively steady this week, and margins are about $84 in the black. So all positive signs. And to the feedlot, it means that they should be able to pay steady, probably higher money. And the futures market for 3 days in a row now have worked higher this week, anticipating that higher cash trade. So April closed at $244. That's about $6 higher than last week's cash trade. Now, I don't expect to see $6 cash trade this week. And if we get anything less than that, we could see the futures market starts to back off or pull back from these areas. So I wouldn't be surprised tomorrow if we're more choppy, two-sided until we start to see where that cash actually is. April options go off the board tomorrow, then the deliveries begin on Monday against that April live cattle contract.
Okay, looking back at the month of March, was the strongest month as far as gains on record for gasoline. Heating oil, strongest monthly gain on record. But you look over at the precious metals, gold had its worst month since 2008, silver its worst since 2011. A little bit misleading there because you also have to remember that they hit all-time highs as well. Do we have to keep that in mind?
Yeah, you always have to keep that in mind. That's exactly right. So, June light cattle hit hit new contract highs today. Didn't stay up there real long, but we did hit those highs and closed up near those highs today. And feeder cattle starting to move higher as well. And I was talking with some producers today. We're starting to see, the index kind of slow down as far as intra-valley. Meanwhile, feeder cattle were adding gains today. At one time, $3.50 gains. That put us well over the index, $6 to $8 above the index. And based on Monday's sale barn activity, that index may not continue to move higher. It may just kind of stabilize or slow down here. And if that's the case, I would not be surprised to see some hedging start to take place. Anytime you get $8, $10 premium over the index, that's a good time to hedge. Conversely, if you're discount to the index by that amount, usually that's a good time to buy because those index and the futures do need to correlate and match up for the April contract. That's by the end of this month.
Okay, before we let you go, let's get the website address. How do we find out more about what's happening with Midwest Market Solutions?
Yeah, our website address is actually redesigned in the last couple months, MidwestMarketSolutions.com.
Brian Hoops is with Midwest Market Solutions. Okay, last one here for you. Left-handed or right-handed? If you throw a ball, do you throw it with your left or your right?
Well, my dominant arm would be right. I can throw left-handed, but not as strong or as accurate as I can right-handed.
Well, on this date back in 1998, Burger King tried to help out those left-handers by creating a left-handed Whopper and a right-handed Whopper. Of course, anybody who fell for that forgot it was April Fools.
April Fools, yeah.
This is Commodity Wrap.